Most entrepreneurs focus their attention on content creation, product design, marketing, or some other discipline. But if you're the head of your business, you're ultimately also responsible for financial accounting and reporting. Hi, it's John, and today we're going to review very quickly the three primary functions of small business accounting. And when we're done, I'm going to give you a few recommendations for sharpening your financial management skills as an entrepreneurial leader. So let's get started. The three financial functions needed in any small business are simply bookkeeping, accounting, and finance. Each function performs specific tasks related to collecting financial information, reporting, and planning. If your business is still small, all those functions can usually be performed by one, maybe two people. As the business grows and the workload requires additional staff, functions may need to be divided among several people or maybe even a few different departments. Let's dive into each of these functions and what business owners need to know about what they do. Bookkeepers focus on data entry, which requires them to know where to enter income and expense transactions into the proper account in the accounting system. Accountants may perform any tasks usually assigned to a bookkeeper, but they also take on more complex assignments. They create the accounting system and ensure that accounts and sub-accounts exist that are appropriate for the type of business. They prepare reports such as income statements, balance sheets, cash flow statements, and more. They monitor accounting data for trends and advise management on what is or is not going well in the business financially. Next is finance. Finance staff have a working knowledge of bookkeeping and accounting and may have actually worked in those fields in the past. However, the purpose of finance is not to record or report financial information. It is to ensure financial stability of the company and plan for the future. For example, finance pays specific attention to fluctuations in income. If income drops or is forecasted to drop below the amount of money needed to pay expenses, finance advises management on how to handle the shortfall. They might suggest accessing financial reserves, borrowing, or temporarily reducing expenses until income improves. If income is higher than expected, finance might urge management to increase financial reserves, make investments, or increase production capacity. As mentioned before, all these functions could be performed by a single person or a small department as a business grows. Just make sure that whoever provides these services is qualified. I encourage all entrepreneurs to learn as much as they can about how their organization collects and reports financial and accounting data. And to help you do that, here are the three recommendations I mentioned earlier. Recommendation number one, take an accounting class. I recommend Accounting 101. You don't need to take much more than that. And you also don't need to take bookkeeping. It's usually included in an Accounting 101 class. You can do that online. You can do it at your local junior college, whatever fits your preference and schedule. Second recommendation is next time you meet with your accountant, whether it's an outside contractor or an inside employee, just ask them, hey, give me a very quick overview of how our accounting system works, just in 1 minute, and let them tell you about what they do. They'll appreciate the opportunity to share, and you'll learn more about what's going on in your business. And recommendation number three is, of course, subscribe to our channel and pay special attention to the Enterprise Development playlist, where we post videos of use to entrepreneurs to help them sharpen their business administration and management skills. I hope if you like this video, you will hit like. Also, if you have comments, questions, or suggestions for future videos, please put them below. And again, please subscribe, and we'll look forward to seeing you next time. Take care.